Smart Silver Stacker here. Hope you're doing great today. Did you see the price of silver today? Look at this. Now, as of this moment that we're doing this live stream, the price is down about 4 cents, down 0.12%. However, this is something that has occurred in post-market trading, and for the most of the day, we had silver sitting well in the green. In fact, you can see that at one point we were almost taking out some new highs today, up almost to 32.50. Now, again, this may seem like sort of a lackluster day, kind of a meaningless day. Silver basically completely flat. But I want to tell you, this is actually a very significant day for the price of silver, and we're going to get into why. First, you have to examine what happened to everything else today. Price of all the major stock indexes, pretty solidly in the red there. The price of debt, interest rates, rising. So bonds selling off, stocks selling off. You can see that's a pretty big move actually in interest rates today. 10-year yield up 1.81%, 30-year yield 1.89%, 5-year yield up 1.18%. I mean, these are significant moves in what is supposedly the world's most liquid debt market in one day, right? And I got to give kind of a shout out to John Lee, who I spoke to last week. He said rates are going to be going much higher. And since he said that, we have seen an absolute spiking in risk, in yields across the board. And it's not just these bonds and other paper assets that are selling off. I mean, look at commodities. Across the board, solid red day for most of these commodities. Copper down, gold down, crude oil down, silver flat. Silver most of the day in the green. Again, it was putting on gains there at one point. So what does this tell us? Well, let's take a look at what was driving this action, these negative price movements across these assets. And the title of this video is that the manipulation of silver may be nearing an end. And in this case, we'll talk about the banks manipulating it, the moneyed elites, all this stuff. But first off, I want to talk about the sort of soft manipulation that we get from the central bankers. And that's kind of what we had today, driving asset prices down. We had this guy, Neil Kashkari, telling us that interest rates could stay high indefinitely. It's the Minneapolis Fed president telling us that. He was speaking at an IMF conference, and this was enough to throw cold water on much of the market. A lot of the recent action that we've been seeing in paper assets hitting record all-time highs, the rally that we've seen in gold to record all-time highs. A lot of this has to do with the perception that interest rates are going to be coming down, right? And so you get this guy, Kashkari, he tells us rates are going to be higher indefinitely, and what happens? Everything sells off, except silver. Now, that's very important for multiple reasons. One, I think it shows that the Fed's ability to perform this soft manipulation, to jawbone the markets lower, at least when it comes to silver, is really coming to an end. And we saw this last week. We had silver break out above 30 bucks, take a rip to 32, and then you had a number of these Fed officials come out in a televised conference telling us that rates were going to be higher for longer, that inflation wasn't under control. And what happened? I mean, we saw the correction, right? We saw silver sell back off down to about 30 bucks, right around 30. The 30 support held, very important. And you saw the other metals sell off as well. Then this week we got the big rally. Looks like the Fed is trying to put a cap on this once again. And, I think a lot of these commentaries are aimed at assets such as silver and gold, trying to drive down the price of the competition to the Fed's product, the fiat dollar. And, you see rates rising today. I kind of want to comment on that. That is going to be a big problem, right? You've got rates soaring on this news, the U.S. Treasury yield soaring. Now, one thing John Lee and I kind of disagree about is that he thinks that rates are going to be moving higher far into the future. This is a very high confidence call for him. And I do tend to disagree that that will be the case, because there's a lot of problems with skyrocketing yields, right? It's going to put a huge amount of pressure on the regional banking system. It's going to mean the interest on the national debt is going to absolutely skyrocket. It's over $1 trillion. The Fed doesn't start cutting soon, that will soon become the biggest item on the national budget. So there's a lot of reasons I think interest rates are going lower, but even if they don't, it looks to me like silver is going to be heading much higher. And there is historical precedence for that, right? Even if yields continue to spike, silver can actually rally alongside that. And one chart that you can look to see that this is historically the way things have worked out is just look at the federal funds rate. Now, of course, it's been on this downward slope. Now we've got a big hike out of this downward trend line. That's why, things are likely to start breaking, whether it be the regional banks, the commercial real estate market, what have you. However, if you look at the past, back in late 1979, 1980, we actually had silver putting on its record all-time high of $50. And if you adjust those dollars for inflation, that real record high from 1980, January of 1980 in silver, it hit $50 back then. But if you adjust that for inflation, it's about $190, $200. Kind of depends on what calculator you use. That's the official numbers. The real all-time inflation adjusted high price, well in excess of $200, I think, because the CPI understates inflation so much. But I just want to point out that metals can do well at a period of high interest rates. That's not necessarily the death knell of the metals. And a lot of people seem to think that, if they don't hike or if they don't cut rates, if rates go higher or if they stay high, that's going to be bad news for the metals. Not necessarily. And that is just historically. Now, many people watching, I know, are going to leave comments about the $50 high from 1980. Oh, that was just the Hunt brothers cornering the market and they got smashed. Well, look, gold also hit a record high of about $850 at that time, and there was no Hunt brother manipulation in the gold market. So just keep that in mind. And that was, again, at a time of much higher interest rates than we're experiencing now. So you could see higher metals prices regardless of what the Fed does with interest rate policy. But if you ask me, they're going to be cutting. I mean, sooner rather than later, because regardless of what Neil Kashkari says, the situation in the U.S. economy has become pretty desperate. We've got $34.7 trillion in the national debt. You've got unfunded liabilities. We can pull that up. Where are the unfunded liabilities on this debt clock? Unfunded liabilities, $215 trillion. That's all the money that we're on the hook for. So all of that's going to have to be financed via debt, or they're going to have to default on the debt, right? They're going to either have to borrow the money to pay all these obligations, or they're going to have to default on the debt and their obligations. I think that it's much more likely they'll be borrowing to pay all of this. And then, how are they going to borrow all that money? Foreign interest, certainly in U.S. treasuries and U.S. debt is declining. There's de-dollarization around the world. So who's going to buy it? Well, the Federal Reserve is, right? They're going to monetize all of that debt. And when that happens, forget 1980. I mean, you're going to see the price of the precious metals explode in a way that I think is unprecedented in history, because where we're at in terms of the monetary policy that the Federal Reserve has implemented to get us to where we are, the skyrocketing levels of debt across all sectors, this all is very unprecedented. And, the public, the retail investor, the majority of people out there, the vast majority of people still have not gotten the memo on silver. You can see that when you look at premiums, right? Premiums on silver are still incredibly cheap. SD Bullion, today's video sponsor, they've got kilo bars for 99 cents over spot. That goes to show you that even though the spot price has risen, very few investors are interested in this market. At least, small-time investors like the moms and the pops, you and me, the stackers who are stacking, 2-ounce silver bars, 5-ounce silver rounds, this kind of stuff. We're not buying COMEX bars. We're not buying 1,000-ounce bars. We're the retail public. We're not in this market yet. In fact, I think it's very likely that a lot of stackers have been lightening up on their physical holdings as silver has broken out above the $30 level. I think there's a lot of people who were, loading up on silver over the past couple of years. They haven't heard, silver's going sky high. They got disappointed. with the performance relative to other assets like the AI stocks, the gold market, gold which is hitting all-time highs, and they see silver getting left behind. And I think now there's a lot of selling in the physical market now that we've gotten over the $30 level. I mean, anybody who bought silver over the past, I don't know, 10 years, if you bought silver over the past 10 years, you are in the green right now, right? Guaranteed, because the silver price is at the highest level it's been in over a decade right now. So certainly, I think there is some profit taking here going on among the retail investors. And that is an indication that the silver breakout is still in its very nascent form, right? When you get a big breakout, a big run up, a big parabolic run up, people aren't going out and selling the asset. They're loading up on it. As speculative interest drives an asset to new highs, that means that you would expect premiums, for example, on physical silver. If that was the case, if it was speculative interest, if everybody and their mother was getting into the market, you would expect premiums to be skyrocketing, and that's very possibly something that may occur. Right now, I want to talk about the other kind of silver manipulation. We talked about Neil Kashkari kind of jawboning the market lower. This is the soft manipulation, which goes on in front of our eyes every day. However, there's a pretty strong consensus out there, it seems like, in the silver stacking community that the price of silver is suppressed intentionally, and not just by talking points from the Fed. It's by actual market participants naked shorting the silver market using paper silver contracts, manipulating the price lower, maintaining this big short interest. Now, I've always been sort of on the fence about this because while, yes, there is evidence that silver manipulation occurs, like this, for example, this is from the Department of Justice website from August 22nd, 2023, former JP Morgan precious metals trader sentenced to prison for spoofing and manipulating the gold and silver market. So, I mean, we know this stuff goes on, but the extent to which this actually controls the price is a little bit harder to pin down. And that's why I've always been sort of ambivalent about how much of the silver price is determined simply by supply and demand, by investor sentiment, versus manipulation. But if you are in the camp of believing that there is an intentional plot to devalue the precious metals, to keep the price held down, then you should be paying attention to the silver breakout that we are in the midst of more than anybody. Because the thing about manipulation is, to the extent that it occurs, meaning someone out there is opening up naked short contracts, they don't own the physical, right? They're just shorting the metal on paper markets, trying to drive down the paper price, because we know that the amount of paper silver that trades absolutely dwarfs the amount of physical metal that ever trades hands. The COMEX does not have the amount of physical metal to back up all of the contracts. That's fairly normal, I think, these days, especially among a variety of assets. The derivatives is a huge bubble, and it's kind of opaque. We don't really know how deep this goes. However, in silver, it's something special, because if there is a plan to suppress the price and then the price starts to shoot up like it has lately, well, you need to understand that if the price exceeds a certain point, the short sellers are going to be in a lot of trouble, right? You could see an actual short squeeze in the silver market. This is the silver squeeze that we've been hearing about for years. It's possible that this could be the beginning of that, right? Now, if that happens, you need to hold physical metal. Yes, you can go out and you can trade the SLV, you can buy mining stocks. I do that myself. I mean, I follow these markets pretty closely, and I do occasionally dabble in the paper side of things. But in the event of a runaway silver price, a spiking silver price, if there are these naked shorts out there, they are going to be destroyed. Now, that means that something will have to happen, right? They're not going to let the banks get destroyed. They're not going to let their trader buddies at the COMEX get destroyed if you see a silver squeeze. Kind of like what we saw in nickel. Back in 2022, we covered this fairly extensively on the channel, but I'll just give you the quick recap. What happened in the nickel market? You had the Russians invade Ukraine. Russia produces a lot of nickel. It created some concern on the nickel market. And then what happened was there was a concentrated short position. This guy, Zhang Guangda, is a Chinese nickel industrialist. He owns a bunch of nickel mines in Indonesia. He had this huge short position to the tune of billions of dollars. And there was a short squeeze. The investors on the LME, they started to bid up the price of nickel, and it moved up from, I don't know what the exact price change was. It was like $30,000 a ton to 100,000 or something like that. It doubled in a very, very short period of time. And they had to halt the market. They kept halting the market, and then they shut everything down. All of the longs who had those long nickel contracts, who were sitting on huge gains, they all got screwed over basically because Zhang Guangda got bailed out. They halted the market. They kind of let things resume an orderly decline in price. They brought it back online slowly. And you could see the exact same thing in the silver market if we get a silver squeeze. So for those who are sitting on COMEX long contracts, you buy a contract there for a certain price and you see the price spike up, you want to take your profits, or maybe you want to settle for physical metal. You're not going to be able to do that, right? They're just going to serve you up some fiat currency. They might even halt the silver market. That's something that could happen, right? If we see a runaway price in this manipulated commodity. Again, it is 100% manipulated. We know that because traders have been convicted for manipulating it, and JP Morgan has paid huge fines for spoofing the gold and silver market. But if it goes as deep as many people seem to believe it does, then that means that the surge in price, it's like what we saw in GameStop, right? The meme stocks. A bunch of investors got together, they bought up GameStop. All the shorts ended up having to close their positions simultaneously. And you saw what happened to the price. I mean, it went up hundreds of percentage points in a very short period of time. Now, again, this is not guaranteed. This is more of a speculative forecast, but it highlights the importance of holding real physical metal. If you want to get your hands on a physical asset that's outside of the financial system, that has the lack of counterparty risk, I can't emphasize how important it is to hold actual physical metal. And that doesn't mean allocated metal somewhere, doesn't mean warehoused metal. Maybe you don't want to have physical metal in your own possession. Well, come up with some kind of a solution for that, right? Some safe place that you can keep some actual physical silver, because only the people who are holding physical metal will benefit in a situation like that. Because if you're holding a paper contract or some derivative of silver, it's not going to be worth nearly what markets would dictate that it will be. Because I guarantee you, if there's manipulation keeping the price down, that if the price spikes up and there's a short squeeze, there will be an intervention there as well. The rules will be changed, and those who aren't actually holding physical metal, you're not going to benefit. But again, silver is a little bit different than nickel, right? If you see the squeeze in the nickel market, everybody who was a long investor really, they missed out because of that intervention. But silver is different. You can actually take possession of your silver. It's not like nickel. It doesn't have to, you don't have to hold tons of it to have a significant amount of value. I see somebody in the chat, Joe Potter, is saying something about what's going to happen on Friday. Sorry, there's a lot of activity in the chat, so I couldn't follow it entirely. But one thing I think we do need to look out for on Friday that's coming up is we've got the PCE inflation data coming out. Now, if Neil Kashkari, job-owning markets, can send assets lower, even though it didn't really send silver much lower today, silver was pretty resistant to that. If we get an inflation print that is below expectations, that's going to make it much more difficult for the Fed to wax on about not cutting rates, right? If inflation starts to come down according to the official numbers, then you could see a huge spike in the price of silver this Friday, Wednesday right now, right? So 2 days from now, you could see a big move in the price of silver. And again, I'm not saying we're going to see the silver squeeze kick off this weekend. I think that would be a bit excessive to try to time markets like that. However, given where the silver price is at and how resistant it seems to be to dropping, regardless of what the talking points that come out of the Federal Reserve are, should we get some positive impetus to the price from here. There's very little resistance between where we are at now, around $32, and the $50 nominal all-time highs that we hit back in 1980 and in 2011. And I just saw someone in the chat talking about how 1980 is a bad example because of the Hunt brother manipulation. Again, look at gold. Gold also hit an all-time high in 1980. So explain that for me if it had nothing to do with economic situations. In fact, let's talk about 1979 and 1980. Very similar parallels to where we are at today. Inflation was up. You had high inflation. That's why the Fed was hiking rates to where it is, where they were. Almost 20%. Paul Volcker jacked up the federal funds rate. You had geopolitical instability involving the Soviet Union. Very similar parallels to where we are today. Why? Because the Soviet Union had just invaded Afghanistan in 1979. So there was geopolitical instability. Now, certainly the geopolitical instability that we're witnessing today, I think, exceeds that from 1979 by a long shot, right? You have got a war in the Middle East that is threatening to expand. You have Russia that has invaded Ukraine, a conflict where NATO may be getting directly involved very soon. You have got China recently conducting some of the biggest naval exercises around Taiwan in history. You have a new president in Taiwan who is very in favor of independence. And so the geopolitical risk right now is higher than at any time since the Cold War, and even during times in the Cold War like 1979, where that was contributing to higher metals prices. The only reason that today we haven't seen the Federal Reserve hike rates to where they were in 1979 is because they can't, right? They cannot hike rates to 20% when the US national debt is almost $35 trillion, right? That's not a possibility, because then you would see the interest on the national debt consume the entirety of federal revenue if they were to do that. I mean, think about that. That's sort of a point that when you get to it, it's game over for the economy and the financial system. When you start seeing the interest on the debt exceeding tax revenues, I think that's a point. I don't even think we can really get to that point, but if we do, you can bet that there's no recovery from that, right? And that is where we are headed right now. Also, I do want to pause briefly. We've got almost 500 people in this stream, and I think that reflects the interest in the silver market at the moment. Everybody's kind of waiting for the next shoe to drop. Do me a favor, smash the like button if you're in the live stream, subscribe to the channel. If you want to stay up to date with what is happening with silver, I'm trying to follow this very closely because right now we are at a critical point in the silver market. And I've got some kind of fun stuff out on the table right now, some of these collectible bars and stuff. And the reason I did that, one, it's because they're cool. I love silver bars. They're one of my favorite forms of silver. And right now, bars remain one of the lowest premium forms you can obtain. Again, you can get kilos for 99 cents over spot right now. That's going to change big time should we see some volatility in the paper markets in terms of a squeeze or in terms of settlement. If people start trying to settle their deliveries, settle their contracts for physical delivery, you're going to see premiums on metal spike tremendously. And in the event of a shutdown of the market, what you have to understand is that the paper price, the spot price that we quote all the time, the spot price is not the price of an ounce of silver, right? It is the price of a paper contract. That's all it is. That price will become irrelevant. And we saw this a bit in March of last year when the banks started to fail and there was a huge interest in physical metal, people trying to get something that can't be printed or, isn't at risk to the Federal Reserve and the banks, something that can't get bailed in. They can't bail in your silver. I mean, they can confiscate it, I guess. But look, I mean, the logistics of a confiscation favor the stacker over the confiscator. I mean, that's all I'll really say on that. But we saw this in March where there was a huge interest in physical metal. And what happened? I mean, premiums absolutely exploded. there was a time when silver eagles were selling for twice the spot price. And that cut both ways, right? If you went to a dealer and you wanted to buy it, yeah, you had to pay double spot. But there was also, at the same time, buyers in the market. I mean, SD Bullion was paying uh, close to double spot for silver eagles. Now, I didn't sell any at the time. I kind of wish I had sold my silver eagles back then because the premiums are back down to some extent. But what you could see if we get a silver squeeze is that situation on steroids. Like you're talking huge minimum orders from dealers, long wait times to get your physical metal, exploding premiums over the spot price, a complete reset, basically. The spot price becoming irrelevant to the silver market. And, once that happens, it's going to be too late to get physical metal. You can't get your physical metal at that point because if you do, I mean, probably still would be a time to get some because if we really see a crisis break out in the financial system, if we really see silver halted, precious metals halted, I think that's going to send a message to investors that nothing that could occur in other commodities markets would. A short squeeze in nickel, a short squeeze in GameStop is not nearly the same thing as a short squeeze in silver. You have to understand that. I mean, the problem is that right now, we are so deep in debt. We are so hopelessly beyond any kind of exit strategy that doesn't involve default or massive inflation that all that they can do right now is try to control perceptions, right? And that's what we saw with Neil Kashkari. But once that ends, once the cat's out of the bag, once the fact that the whole system is insolvent and in massive inflation is inevitable. Once that kind of leaks out, you can't put the cat back in the bag, right? So I think that should such an event take place on the significant rally in the silver price that is likely ahead, then it's going to persist for some time, and you're going to really want to get your physical metal before that. I see some people in the chat saying they made some good trades back when premiums were super high on Eagles, and yeah, I mean a similar situation could occur. If there is a squeeze, it will likely be preceded by a significant rise in the paper price. So, hypothetical scenario, you could see silver in a short period of time rising to new all-time highs. Let's say it rises from 32 to 45 or $50, right? Close to the nominal all-time highs, which still, again, adjusted for inflation, are not really near the all-time highs. But even that, I think, could cause significant problems in paper markets. And if that happens, then you're going to see premiums shoot up from an already elevated price. So that's when you could see, $100 for an ounce of silver. I don't think is outside the realm of possibility. Think that in the past 4 years alone, the official inflation aggregated rate is something like 25%. I mean, when you keep that in mind, you start talking about numbers like that. $100 silver is well within the realm of possibilities. Someone just asked Joseph Townsend in the chat, what's the inflation adjusted all-time high? I think it's actually closer to $200 if you adjust the $50 price from 1980. Someone with an inflation calculator, put it in the chat real quick. What is $50 in January of 1980 compared to May of 2024? I think it's almost $200. But again, it's hard to say because that's using the official CPI, right? And the real rate of inflation is higher than what we are told. I don't think that that is a secret at this point, that the CPI deliberately understates inflation. So you could be talking, I don't know, $250, $300 for the all-time high, maybe more. If you use John Williams' Shadow Stats numbers, it's probably like in the $500 range. But ultimately, talking about all these fiat dollar prices, that's only accounting for the inflation that we've experienced thus far. When you talk about that inflation adjusted price, right? It doesn't take into account the inflation which is around the corner. So if you want to talk about what the future inflation adjusted all-time high will be, there is really no ceiling for how high the price of silver or any other physical tangible asset could go, right? I mean, this goes for gold and platinum and copper and all these other things as well, because you're talking about them priced in US dollars. So if the bottom falls out of the dollar and the hypothetical floor for any fiat currency like the dollar is zero, many of them have been devalued significantly over the past, couple decades, but you want to go back centuries. I think in Ray Dalio's recent book, the title evades me. Something about dealing with significant changes in the global economy or something like that. He points out that of all of the fiat currencies which have existed over the past several centuries, something like 80% of them are completely gone, and the remaining 20%, every single one of them has been significantly devalued. There is no fiat currency which has held its value. So, again, as we head into this period of uncertainty regarding interest rates, geopolitical tension, massive deficits, massive interest on the debt, throwing out fiat dollar price targets, it's sort of a fool's errand, if you will. I mean, it's fun to do, it's fun to speculate about. Certainly, I've done plenty of that myself in these videos, but the price in dollar terms could go infinitely higher than it is right now, right? I mean, if you fast forward the clock, I don't know, 500 years, assuming they haven't figured out how to create elements atomically or something like that, and solve the resource problem entirely, the dollar price of silver will be irrelevant because at that point the dollar will almost certainly no longer exist in its current form. Keep in mind that the dollar in its current form has only been around for a little over, 50 years. I mean, 1971, that's when the dollar was taken off of the gold standard by Richard Nixon because of all of the excessive government spending of the decade previous to him with the Vietnam War and the Great Society and all those things. Right now, we've got a purely fiat dollar. The world is on a purely fiat standard, and the underpinnings of that are beginning to melt away. Yeah, I see someone in the comments here, Ronan, talking about the BRICS organization. Well, yeah, absolutely. I mean, the geopolitical scenario here could lead to much higher silver prices. It could lead to a lot higher silver demand around the world. In China right now, in the Shanghai Gold Exchange, silver, I haven't looked at the price today, but yesterday it was trading for almost $36. So in some of these nations, certainly the demand for precious metals is on the rise. I've heard rumors that China has been encouraging its populace to stack silver. Now, it's been hard to verify those rumors. I've seen a lot of people talk about that, but very few actual definitive sources regarding that. Maybe that's just part of the rumor mill. I'm not sure. Put it in the chat or in the comments. If you have a source, I always like for things like that to have a source. That's like the claims of manipulation. There's a lot of claims of manipulation, but I rarely see any confirmed sources that there is this like ongoing daily manipulation of the silver price. And when I do see people, I ask for sources because people leave comments about this, and they'll just post to some talking head, some silver guy talking about it. Right? That's not proof. That's not a source. That's just him spouting his mouth off. And don't use me as a source unless I'm pointing to some kind of a document or something confirmed. However, there is confirmation that manipulation exists. Again, Justice Department, we can look at that. That's concrete. We just don't know how much. But, I'm kind of rambling at this point. Touched on a lot of things in today's video. But I think the takeaway here is that any manipulation of a critical industrial asset like silver is doomed ultimately to fail, right? You cannot suppress the price of something in the long term simply because of supply and demand. If you suppress the price of silver for too long, it will remove the incentive for producers to mine it out of the ground, and therefore a shortage will develop. We're experiencing deficits in the silver market right now. We have for years. 100 million ounces plus was consumed last year that didn't get replaced by production. Now, I had some people mention this in the comments after I said that in a recent video, and they said, oh, you say that silver's got this shortage of 100 million ounces a year. How come it's still in the stores? Well, you got to understand the difference between a deficit and a shortage, right? Deficit means that more of it is being consumed than is being produced, which is the case right now in the silver market to the tune of 100 million ounces plus per year. That doesn't mean there's a shortage yet, although the price is rising, right? And in a free market, you also have to understand that when there's a shortage of something, it doesn't mean you can't go buy it. It just means that the price rises and that there's not enough supply to meet demand. So maybe there's wait times, right? So I think it's fair to say that in March of 2023, when banks in the United States started to fail, there actually was a shortage in physical silver. Premiums exploded, wait times exploded. That's a shortage. But when you have a shortage in a free market, Goods don't become unavailable just because there's not enough supply to meet demand. Goods typically will remain available just at very elevated prices during a shortage unless the government or some authority attempts to implement price controls. That's when things actually become completely unavailable on the market. For example, in Venezuela, when they had their hyperinflation, a lot of goods were in short supply. You could still get them on the black market as long as you were willing to pay high prices. However, in government stores, where there were price controls, the shelves were empty. So that's an important thing to understand about supply and demand and shortages and deficits. Just a quick aside there. But again, the bottom line here, manipulation is unsustainable. If we see the price of silver skyrocket, if we see it run up in a big way, and historically, when silver breaks 30 bucks, it's not long before it runs up to new all-time highs. In 1980, that's what happened. In 2011, that's what happened. And those are the two times that silver has broken $30, right, in a big way. And so we're at one of those times now. These markets tend to move in a cyclical manner, and we're kind of overdue for a big run up in silver. But if there are these concentrated short positions at certain institutions, then you could see the silver squeeze actually take place. And so, for those out there, I don't give any financial advice on this channel. But for those perhaps who bought into the original silver squeeze and then were disappointed because it didn't happen right when everybody said it was going to, and then they've been maybe sitting on some losses and they're thinking about getting out, I would reconsider that, right? This is actually a great time to be getting into the silver market. We just saw a significant breakout. It appears that attempts from the likes of Neil Kashkari are no longer sufficient to drive the price lower. And historically, when silver breaks 30 bucks, that's when you want to, get in for the next big run up. I see someone in the chat here, Rory, who says, don't blame old Tricky Dick for taking the U.S. off the gold standard. It was Roosevelt in 1933. Yeah, well, politicians across the board all have their, share of the blame, I guess. They typically tend to talk a good game when they're running for election, and then they just try to buy more votes by running up the debt, by borrowing money from the future and spending it for their constituents in the now. Nixon was the one who actually ended gold convertibility, though. But yeah, certainly Roosevelt laid the foundation for that years before. You're not wrong about that. So that's it for today, everybody. This was a long one. Do me a favor, smash that like button, share the video. Send this to someone you know who doesn't know anything about silver, because time is getting short here. I believe that's my forecast, and it is a good time to get into hard assets, especially just to establish that core position in physical. Even if it's only a small amount of physical metal, I think there will come a time in the relatively near future when you're glad you established that. So let me know what you think in the comments down below. Stay safe. Happy stacking, everybody. I will catch you next time. Smart Silver Stacker out.